A very good evening. You are watching our rolling coverage, and on this episode we try to decode budget for bulletproof Bharat. Or was it? Finance Minister Nirmala Sridharan presented her 9th consecutive budget today. Now, cut back 6 years ago, back in 2020, Nirmala Sridharan delivered the longest budget speech in India's history. It was 2 hours and 42 minutes, but it was filled with excitement. The new tax regime was introduced, the dividend distribution tax was abolished. Deposit insurance was hiked from 1 lakh rupees to 5 lakh rupees, and a lot more was done 6 years ago. But this year, the budget speech was much shorter at just 1 hour and 23 minutes. But excitement was absent today. Boring by some accounts, conservative by some estimates, and not as energizing as what India had become accustomed to, especially compared to last year when sweeping tax rebates propped up consumption to 60% of India's GDP. Now, the finance minister has kept tax slabs virtually unchanged this year. A hike in security transaction tax for futures and options seems to have spooked market participants who are questioning the timing of such a move when foreign investors are already on exit mode. Now, this morning, Nifty 50 slipped 2 1/3% in trade. Sensex lost more than 1,800 points in today's trading session. Budget 2026 was expected to focus on job creation, provide a fillip to manufacturing, and also create a scenario for foreign capital to come to India. Now, some argue it did not live up to expectations. Others say boring is not bad, conservatism is not complacency, and budget energy is that of a test match. Slow but sure singles, not necessarily hitting the ball out of the park being the need of the hour. Now, some of the highlights of Budget 2026 include a Capex allocation increase to 12.2 lakh crore rupees, component manufacturing incentives of 40,000 crore rupees, MSME booster of 20,000 crore rupees, and continuity of the India semiconductor mission with a new 2.0 avatar. Now, the fiscal glide path of 4.4% deficit target for this year, reducing to 4.3% next year, and a debt to GDP ratio to touch 50% by 2030-2031 are on expected lines. Cut to artificial intelligence, that got a shot in the arm with the tax holiday for cloud infrastructure investments in India, and safe harbor clause for the IT sector too was a welcome move. But no expansion to PLI schemes, no mention of employee-linked incentives, and absolute silence on climate financing dampened the sentiment. While Prime Minister Modi hailed the budget as a reform-oriented one, no big-ticket announcements by the Finance Minister made Budget 2026 perhaps the least memorable one in recent years. Let's first listen in to Prime Minister Modi addressing the nation soon after Finance Minister Nirmala Sridharan's budget speech in Parliament.
आज सुबह ही संसद में देश का बजट प्रस्तुत किया गया है। ये बजट गरीब, अन्नदाता, युवा शक्ति और नारी शक्ति को और सशक्त करने वाला बजट है। ये बजट गांव को मजबूत करने का बजट है। ये किसान की आय बढ़ाने वाला बजट है।
And Commerce and Industry Minister Piyush Goyal also hailed the budget as a forward-looking one. Let's listen in to the Commerce and Industry Minister.
ये बजट फ्यूचर रेडी भारत का बजट है, जो माननीय प्रधानमंत्री नरेंद्र मोदी जी के नेतृत्व में 15 अगस्त से ही रिफॉर्म एक्सप्रेस की गति तेजी से आगे बढ़ रही है। उसकी एक बहुत अहम कड़ी माननीय निर्मला सीतारमण जी ने इस बजट में देश के समक्ष पेश की है। ये देश को एक विकसित भारत 2047 तक लेके जाने के लिए गति देता है और बल देता है। मजबूती से एक बड़ा दूरदृष्टि की सोच के साथ फॉरवर्ड लुकिंग एजेंडा ये बजट देशवासियों के समक्ष रखता है। हमारे युवाओं के लिए, युवा युवतियों के लिए, हमारी महिलाओं के लिए, हमारे किसानों के लिए, मछुआरों के लिए, सभी को।
Well, that's what the government says, but opposition leaders were quick to discard the budget as a missed opportunity. Let's listen into Shashi Tharoor and Congress President Mallikarjun Kharge.
So we're all looking forward to hearing what the finance minister has to tell us. The economic survey projects good economic growth, but our problem very much for the young people of this country is whether that growth is going to be accompanied by jobs. The jobless growth doesn't help anyone. So we are.
मोदी सरकार के पास अब नई आइडिया खत्म हो गई है। ये बजट भारत की कहीं अधिक आर्थिक, सामाजिक और राजनीतिक चुनौतियों के लिए एक सवाल होके बैठा है और खास करके ये बजट गरीब तबके के लिए इसमें कुछ नहीं है।
All right, so with that, let's dive into decoding the numbers, decoding the sentiment, as well as the rationale with a set of very eminent experts who join me tonight. Dr. Arvind Virmani, member Niti Aayog, Nilesh Shah, Managing Director, Kotak Mahindra Asset Management Company, Richa Sani, Tax Partner, Grant Thornton Bharat, Anand Ramamurthy, Managing Director, Micron India, and Seva Ganapati, Managing Director, Gokuldas Exports. Gentlemen, as well as Richa, thank you so much for joining me. Before I come to you, joining me in the studio is TV9 Network's Editor International, R. Sridharan. Sri, let me first begin by just asking you very, very dispassionately, very objectively speaking, what was in it for India in Budget 2026?
So, Karthik, if I were to give it a very objective kind of a look, I don't think this is a bad budget at all. It's very, very competent. It's very solid in its foundations. I especially like the fact that the government has kept a very strong focus on its fiscal discipline, the commitment to a target of 4.3% of fiscal deficit as percent of GDP.
Yeah.
That's very, very reassuring. The government has kept up its expenditure commitment, increasing it marginally because it's the government expenditure, the public expenditure, which has actually been driving the economic growth in the absence of private sector investment. And also, I think the ease of doing business, we've seen many measures which will actually help for businesses and industry to do business in India much better.
Right.
But I think given the overall context in which the budget was set, which is the global uncertainty and the fact that a lot of financial institutional investors have been voting, running to the exit door, I think the budget could have done some sort of signaling to tell them India is open for business, and especially at a time when you're signing FTAs and you're doing bilateral deal with countries.
Right.
I think the opportunity was to tell them that India is open for business, and we will go out of our way to make it easy for you to invest and stay invested in India. I think that signaling could have been possibly done in this budget, because budget is also a policy document which global investors watch. So on that, I think on that front, I think it was a bit of a missed opportunity, but otherwise, I would say it's a very competent budget, Karthik.
All right, a competent budget, perhaps boring, but definitely, it's not that there's nothing in it. But let me take this over now to Dr. Arvind Virmani. Sir, according to you, is Union Budget 2026 indeed a growth and reform-led budget, or do you think we've missed out on the opportunity that Sri was talking about for delivering to the rising aspirations of India?
I think of fast, sustained, inclusive growth. So, what are the elements of it? So, one is macroeconomic stability. Everybody, you'll recall for 50 years, we all talked about macroeconomic stability.
You're right, sir.
Now we have that framework and we have stuck to it. So, that we now take for granted, but it's very important to note it. And, when we had a shock in the pandemic, as a result of the shock, you have fiscal effects all over the world, and now we brought it back down. So this commitment and faith of the government in macro stability is very important underlying foundation on which everything rests.
Okay.
So the second part, which of course has accelerated 3 months or so, it's happened over time before also, the IBC, GST is one and so on.
Absolutely,
but
those
it
have
has
been great
accelerated,
reforms.
but it has two parts, right? there is a structural reform part, which is the part which is accelerated, and there is a process reform which is going on, like decriminalization, etc., which is goes on. So the budget does take up these issues because it can only do so within the items which are under its preview, which is taxation and the financial sector. So in taxation, we had the income tax law, and the rules and the forms, etc., have to be built, and they have to be simple. People often complain that between the law and the actual application there's a gap, but so the finance minister has tried to ensure that that simplification is goes down to the ground. And
right. I'm sorry, I'll just cut you short, Dr. Virmani. I just want to sort of interrupt, and I want to understand from you, in the interest of time, with the fiscal deficit for this financial year targeted at 4.4%, it's likely to reduce to 4.3% next year. Are we looking at more tax revenue or more government expenditure schemes going forward when we look at the 50% debt to GDP ratio over the next 5 years? So if you could quickly answer that, I'll move on to other guests then.
Yeah, so getting down the fiscal deficit means both, right? You have to reduce expenditure, rather increase expenditure at a slower rate than the GDP, and increase taxes or disinvestment at a faster rate.
Sure.
So I think there was an expectation last budget that or perhaps it even said that they were drawing up a slew of proposals for disinvestment. I think those probably have been done by now, and the pace of disinvestment will pick up.
All right.
Which is why some people have noticed the difference between the net debt mentioned and the gross.
Yeah.
So the difference would be the privatization revenues.
Absolutely, privatization revenue. Sure, Dr. Virmani. I want to also introduce Mr. Nilesh Shah at this moment. Mr. Nilesh Shah, your opening comments, sir, did Budget 2026 deliver on the reforms agenda, or which was expected? Or some say that this budget, and to use your favorite analogy with cricket every time, some say that this budget didn't really deliver the T20 excitement, but rolled the perfect pitch for a test match spread over the next 5 years. Your opening comments, sir.
I think you summed it up very well. This was not a T20 budget, it was a test match budget.
Okay.
First time we saw capital spending going or exceeding net market borrowing. We were narrowing the gap, but first time Capex is more than the net market borrowing.
Right.
Second, there is investment for the future, from cloud computing to biosimilar to containerization and so on and so forth. So this budget is a test match budget, fiscal prudent, investing for long term.
Okay.
At the same time, taking care of immediate requirement of the economy.
Right.
Yes, there were some, disappointments like STT increase, which is why markets fell.
Yeah.
But that's okay. Eventually, market will like test match.
Market will be like test match. It will recover potentially. We are losing you, Mr. Nilesh Shah. We'll try and get you back. Richa, let me take that conversation forward with you. And I think the biggest question mark that everybody has ahead of the budget speech is, will I get more income tax breaks? Am I going to have more money in my hand? Rather, this time around, what Mr. Nilesh Shah was also talking about, an addition in the security transaction tax for the F&O segment. Was it really needed at this juncture? And could something have been done rather for income tax?
So as far as having more income in the hands of individual taxpayers is concerned, I think enough was done last year.
Yeah.
And so there was not much of anticipation that there will be anything significant this year.
At least inflation adjustment, Richa, at least inflation adjustment in the standard deduction, if nothing else. Is that asking for too much?
That was something which was top on our wish list, that even if something major doesn't happen, an annual tweak in the slab rates that could make you immune from these inflation and cost of living changes.
Right.
If that could have happened, that would have been really aspirational.
Okay.
But yes, we knew that, considering the slackening of the personal income tax growth rates that we've seen this time, it was perhaps not feasible.
Okay.
Coming on to the STT, I believe this essentially comes as an extension of what was done in 2024. and maybe the apprehension of the government that F&O sector is causing more harm to individual taxpayers who explore this area without having too much knowledge about it.
Right.
So maybe it comes as a consequence of those reports and that data,
Sure.
which had expressed some apprehensions on this.
All right. Yeah, we understand the rationale. Nilisha, we lost you. You were making that point, sir. I want to come back to you on this STT point. Now, we have seen, at least in the trade today, that market participants have given a massive thumbs down to the changes in STD. We understand, and this is something that even Richa is talking about, that it is going to lead to a reduction in speculative trades, no doubt, but more fright for foreign institutional investors, sir.
So we believe FPI today were absent in the market, not many people were trading. And finally, FPIs will come to India not basis what STT will levy, but what kind of earnings growth we can deliver. But one point from a market point of view, at one point of time, STT was levied in lieu of capital gains. Then capital gains got reintroduced.
Right.
Then capital gains got increased. Now STT is also being increased. So there needs to be a consistency in law. What you promise, you can't break.
Right.
And you can't keep on tinkering so fast.
All right. Okay. Point well taken, sir. I understand that the speed of tinkering perhaps needs to slow down, but I want to bring back, before I go to Siva and Anand Ramamurthy, I want to bring back Dr. Arvind Virmani into this conversation. Sir, for the MSME sector, there has been a sizable reduction in critical import duties along with a cumulative sort of budgetary allocation to the tune of about 20,000 crore rupees or so. Now, the biggest question really was about job creation. Do you think this is enough, and how soon, in your opinion, will it really lead to job creation, sir?
So, you have to see that, in MSMEs, we have some sectors or sub-industries which are have very high quality, which are exporting to the world, like certain types of handicrafts, textile items, etc. But what again the Honorable Prime Minister has emphasized is that we need to raise the quality of the whole system, So the question is, what is the thing? We've had several programs to provide technology, etc. But it's a package, so it has to be both. The skills have to be provided, where much more emphasis being given now. The capital investment has to go with it, because technology just doesn't come in the air. It is often embodied in the manufacturing process, which means machines, corresponding skills, corresponding components which go into it, right? So all this requires more risk capital. So that is where that fund which you mentioned, which is in this budget, that equity fund will provide this aspect which perhaps has been missing. People talk about credit to MSMEs, but that credit is really working capital. So the idea is that all this stuff which has to be done together, skilling, new types of components, machinery, etc., requires increasing their ability to take risks.
Sure.
Of course, for startups, we have already been providing many funds, but perhaps this gap was seen in MSMEs to help them with this missing link, so to say, because it's a whole package. So I think that will help them take these risks of improving their quality, because once you improve the quality, you also need to charge higher prices.
Fair enough.
Right? So there is a little bit of risk which has to be taken by every MSMEs to when they are improving the quality. So that is the idea.
Fair enough.
Provide them with the risk capital, which will kind of help them along with all these other programs which are already there.
All right, fair enough. That risk cushion, Siva Ganapathy, do you concur with what Dr. Arvind Virmani is saying, that while there's a solid sort of export push by way of reduced import tariffs, do they really make MSMEs more competitive? And is it enough to thwart the tariff pressure on Indian exporters?
See, this budget endorses continuity of policies, ensuring business as usual. India is an island of good macroeconomic performance in the world, and the best we can have is to ensure that we continue on this path in a steadfast manner.
Sure.
So in that sense, this budget is absolutely in the right direction.
Okay.
particularly for manufacturing industries which are, in the exports business, reeling from the current tariff, we would have liked to see some support or benefit.
Okay.
It also depends on, what is the prognosis for tariffs in the
So what more could the budget have been done? Siva, if I can interject, what more should the budget have done to prop up the MSME sector exports?
See, if I look at textiles, right, which is also a big generator of jobs, almost a third of what we produce is exported to the US, which is under duress at this point with high tariff. The FTAs with Europe, etc., will take time to consummate, and hence, in the interim, there could be some stress from an export business standpoint. And support in the form of partial relief for the tariff related burden that we are sharing, or some employment related support that we could have extended to the industry could have certainly helped in supporting smaller enterprises in the business. So many of the smaller enterprises, MSMEs, will be particularly stressed because this high tariff is something which will make them significantly under competitive or uncompetitive vis-a-vis global, competitors.
All right.
So that's an area. Similarly, RODTEP and ROSCTL, the allocation has slightly come down from previous year, which could have, that probably needs a relook to support the industry.
All right. So potentially a missed opportunity there for propping up those MSME exports. Let's pivot now to what the budget did in fact deliver on. Anand Ramamurthy, congratulations. The renewal of India's semiconductor mission, now in a 2.0 avatar. It was something that you had specifically laid out in your budget wish list too when we spoke earlier this week. Now add to this, there's another 40,000 crore rupees incentives on component imports for electronics manufacturing. Is India now finally getting ready to deliver on its promise of Atmanirbhar AI semiconductors?
Good to join you again, Karthik, and leveraging the metaphor you started with, semiconductors and deep tech is like a test match.
Okay.
And clearly what we saw today was a logical continuation of the first version avatar.
Okay.
And by all accounts, the 1.0 is a fairly good success. We've had a good utilization of the provisions. We had a good choice of partners who have been brought to the equation, including Micron.
Yeah.
So the 2.0 was an expected outcome. We are looking for more details from the line ministry to lay out exactly, but it also is a great appreciation for how complex the semiconductor value chain stack is, right? It's not just about the front end, back end manufacturing. The 2.0 is going to look at equipment, it's going to look at supply chain, it's going to look at R&D. It will be much more comprehensive. So extremely happy to see that come out. It is a continuation of the strong signals we've been receiving in the semiconductor sector. So that's clearly a very welcome, positive, and looking forward to more details coming in the next couple of weeks and months. The electronic component outlay increase is also a positive signal. There is again a very significant level of passives, components, PCBs, modules. All of these have to have more and more of India manufacturing footprint. The whole idea of Atmanirbhar Bharat, right? And the demand and the request from the industry has been intense. In fact, the minister just before the budget many a times mentioned that the initial outlay was not adequate. And it was obviously, the increase in outlay is a reflection of increased demand, increased interest, and increased need. And all of these three coming together. So again, another positive. So both signals are quite positive from electronics semiconductor standpoint.
Absolutely. So the budget is definitely a positive for the electronics and the semiconductor sector, purely from a manufacturing standpoint. Shri, if I can bring you back into this conversation, do you think there's need for the government to step in and create a DPI-like infrastructure framework for artificial intelligence specifically to help the entire AI ecosystem benefit?
Oh, absolutely, Karthik. Because I think just like AI should be contextual to the Indian condition, the AI development and the facilitation of AI in this country should also be specific to our condition. We don't need to necessarily replicate the Western model. We don't need to be Chinese or we don't need to be American in that sense. We need our own models which work for this country. So I think we have demonstrated that DPI, which is a digital public infrastructure, the multiplier effect that we can create in the financial markets and in empowering people financially. I think something similar has already been initiated by the government, which is like creating common compute. I think across the stack, especially when we look at SLMs and the creation of applications for our purposes, whether it's for the farmers, which the finance minister touched upon today, or it's for the education sector or for healthcare. I think we need solutions that are made for India, which are very specific to us. Sure. So I think we don't have the billions to spend on, for every company to build its own AI, LLMs or like build its own models. I think we need to pool in our resources and make it available to our innovators, our great innovators. We have the most powerful IT industry sitting here. So we should make them leverage this. And that's why we need a public infrastructure around AI that the ecosystem can leverage.
Absolutely. Well point, very well taken. In fact, both on the manufacturing as well as potentially a missed opportunity on creating that DPI-like framework. At this moment, we are also joined by Ankit Mehta, the co-founder and CEO of Idea Forge. We will talk all things drones, whether it's defense or agriculture in just a bit. But Nilesh, if I can come back to you, sir. We heard incentives for even rare earth minerals, mining and the equipment import thereof. But metal and mineral stocks today had a free fall in the stock market. Now, can you explain to us, could the budget, have specifically, what in the budget specifically could have disappointed the metal and mineral sector today, sir?
Well, the metal and mining sector's disappointment was not linked to the budget.
Okay.
It was linked to the crash of silver and gold prices.
All right. Okay.
The Hindustan Zinc of the world makes 30% of their profit from silver.
All right.
And silver goes down 30%. You can very well imagine what will happen to their profit.
Right. Okay. So thankfully, it was nothing to do with the budget, because we were wondering, is there something that we are missing in the fine print, which really has spooked the investors there? But okay, that's a point well taken. Ankit, if I can introduce you to this conversation, I really want to understand from you that we've seen an increase in defense allocation, we've seen an increase in agriculture allocation, but the budget speech this time around did not really mention drones. I did read the fine print, and there has been an allocation towards drone development, R&D as well. Overall, are you satisfied as far as Atmanirbhar drones are concerned, which has been a focus area for the government? Has Budget 2026 done enough?
Yeah, I think the defense outlay automatically speaks about the fact that, whatever we have learned from the Ops Sindoor and the need for unmanned systems, it is automatically going to essentially signify that a large part of what is being allocated additional and part of what was already being procured is likely to get allocated to the unmanned systems and the counter drone systems technology.
Okay.
That's a obvious direction, and we are already seeing hints and news in that direction.
Sure.
Plus, I think the drone DD scheme, the investments in that are going to be continuing, and they are going to be accelerating this year as compared to last year.
Yeah.
So that's a very positive sign. And yes, the R&D on the R&D side, again, there is a mention of that. So again, that is an important area.
Yeah.
But we were expecting the announcement of the PLI on the components, etc. as well. But my guess is that it's going to happen progressively if it does happen. But I think it's a very strong sign that we are looking at drones as a capability and technology. Maybe we don't want to talk about the details of that very specifically at this point in time as a strategy as well.
All right, Ankit, we'll not push you for that. But Siva Ganpati, let me bring you back into this conversation. A very important point which, which Ankit just made about PLI. PLI did not get extended to the drone manufacturing sector, but overall, the budget was absolutely mum on PLI expansion. It didn't even include new chapters on toys, for example. But coming back to the MSME export story, we did hear textile, apparel, leather, fisheries. All of these got mentioned in the budget, but gems and jewelry, arguably the hardest hit sector with tariffs. Absolutely nothing on that on the budget. Do you think that's a missed opportunity again from India's export standpoint?
I think gems and jewelries were also, significantly impacted with tariff. So probably it could be. But again, there are so many sectors in India, and as long as manufacturing industry continues to get budgetary, positive policy directions, then, India has to develop in this segment. There are several countries around us which are, which are becoming a bit uncompetitive going forward, either due to rising wages or geopolitics, etc. We do have a good opportunity, and we should, over the next 5-7 years, really focus on manufacturing as a sector and create a lot of capacities in this country from a global service standpoint. And there are tons of opportunities available, and I think across sectors we need to look at it.
We are running out of time. I want to actually ask Mr. Dr. Arvind Virmani, sir, you know, every time you talk exports, every time you talk incentives for exports, the larger question of US tariffs continues to loom over all of us. So, according to you, sir, Budget 2026, tariff mitigation with regards to the US, did that really happen?
So, now that is really the issue is of industrial policy and many different parts of the thing, but I'll just mention a few. We have been talking, the PLI came years ago, right? It started several years ago. FTAs are first, if I remember correctly, our first FTA with a developed country was with Australia, I think 3 years or so ago. So these are all elements of the industrial policy which all have to fit together. The reforms which are accelerating, which we went and looked at. Of course, the infrastructure had been improving for some times, but some new elements which are mentioned in the budget, for example, local infrastructure. So one of the things we found is that on our travels was that the mega parks and all were being set up, but the historical or the legacy industrial areas were being relatively neglected.
Right.
So the budget has tried to correct that. So so the industrial policy has many elements, and FTAs is one part of it, and the whole idea is to de-risk, right, to develop resilience in manufacturing so that no country in a sense one country can disrupt.
Right.
So we've had different disruptions, right? Rare earths disruption came from one country. Import tariffs came from another country. So you need a industrial policy which has many elements. I mean, we don't have time to go into all elements of it.
All right.
But that is part of the process which is going on now for
All
several
right.
years.
Right.
And as we discover new gaps in a way, we try.